Welcome, fellow traders. Today, we're going to talk about swing trading, an exciting and potentially profitable way to invest in the stock market. But first, let me ask you, do you have a winning strategy? If not, don't worry, that's why we're here. Swing trading requires a solid plan and a disciplined approach. Without these key elements, you could end up losing money instead of making it. But with the right strategy, you can achieve success and financial freedom. Swing trading is a popular trading strategy that involves buying and selling stocks within a short time frame, typically a few days to a few weeks. Unlike day trading, which involves buying and selling stocks within the same day, swing traders hold onto their positions for longer periods of time to take advantage of price fluctuations. One of the key differences between swing trading and other trading strategies is that swing traders focus on technical analysis rather than fundamental analysis. This means that swing traders use charts and other technical indicators to identify trends and patterns in the market, rather than analyzing company financials or economic data. Tim Morris's swing trading strategy is a proven method for achieving consistent profits in the stock market. With a win rate of 97.71%, this strategy has helped countless traders achieve financial success. The key to the 97% swing trade strategy is identifying stocks with strong upward momentum and buying them at the right time. By using technical analysis and chart patterns, Tim Morris has developed a system for pinpointing these high-potential trades. Step 1. Identify the trend by analyzing the price action. Look for higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend. Step 2. Use technical indicators such as moving averages, MACD, and RSI to confirm the trend and identify potential entry and exit points. Step 3. Set your stop loss and take profit levels based on your risk tolerance and the market conditions. Step 4. Monitor the trade and adjust your stop loss and take profit levels if necessary. Step 5. Exit the trade when your take profit level is hit or when the trend reverses. One important tip for successful swing trading is to keep a trading journal. This will help you track your progress, identify patterns, and learn from your mistakes. Make sure to record the details of each trade, including entry and exit points, stop loss levels, and profit targets. Another useful tip is to use technical analysis to identify potential trades. Look for chart patterns, support and resistance levels, and indicators such as moving averages and relative strength index, RSI. However, it's important to remember that technical analysis is not foolproof and should be used in conjunction with other forms of analysis. In conclusion, swing trading is a powerful strategy for those looking to maximize their profits in the stock market. By implementing Tim Morris's 97% swing trade strategy, you can increase your chances of success and achieve consistent gains over time. Remember to define your entry and exit points, use stop-loss orders, and manage your risk appropriately. With practice and patience, anyone can become a successful swing trader. Thanks for watching. Like and subscribe, and we will catch you on the next one.